Welcome to the Sazmining Podcast. At Sazmining, we are bringing you into conversations with today's industry leaders in blockchain and cryptocurrency. Our goal with this podcast is to improve the understanding and adoption of blockchain and cryptocurrency by giving you an insider's look at what's being built and informed predictions on what the future holds. Welcome to the podcast, guys.
Thanks, Will.
Yeah, so been really looking forward to this conversation, not only because CoreScientific, the things you guys right now are doing in the space is absolutely incredible, but also because this is the first time that we've had two people onto the podcast. So this is the first of hopefully many.
Fantastic. Looking forward to it.
Yeah.
Absolutely.
So I guess we'll start with you, Russell. Could you talk a little bit about your journey within this industry, how you got involved in mining, and what landed you at CoreScientific?
Yeah, let's go ahead and I'll give you a little background on Core. So CoreScientific got involved. The founders started mining in 2012. In 2017, though, they kind of formalized a mining operation. At the same time, I got involved in a mining operation in GPUs. And the folks that started Core bought a facility in North Carolina. And the mining operation, in order to really get efficient, in early 18, we started actually hosting other folks. And we did that because you really have to get to scale. The cost of power, the cost of operations, the cost of software, the management software, that kind of stuff, you really have to have scale in order to be efficient. So mining expanded into hosting. We later on, because of the software involved and the infrastructure involved, got involved in the AI space because the infrastructure is very similar. A lot of power, a lot of heat, a lot of compute power. A lot of electrical power and a lot of compute power. They're both very similar in the blockchain and the AI side of the house. And, from there we've grown, we've expanded, and we're now we have operations in North Carolina, Georgia, and Kentucky. We're headquartered in Bellevue, Washington, outside of Seattle. We have engineers, sprinkled around the country. And most of our software guys, though, are located in the Pacific Northwest. And most of our data centers are located mostly in the Southeast. And from the perspective of growth, we are still considered that we still mine. We do a lot of our own mining, but we try to be a good host partner for folks. So what we do is we partner with folks that are doing their own mining on their own machines, but we try to be the hosting partner, to be an efficient hosting partner for them. And with the size scale that we have, a lot of times it's less expensive for folks to come and bring their machines and host them with us than, say, build and operate their own facility. And with our software dev team, we've been able to automate a lot of the management process of the machines, thus driving down the operating costs and adding efficiencies to the whole market. I guess that was kind of a long answer to a short question about how Core got started. But I joined Core in late 17, early 18. I sold my business. I had a GPU mining operation, sold it to Core, and really got Core involved in the GPU side of the business when it was doing ASIC mining only. And I've stayed on at Core for this whole ride, and it's been fun.
Yeah. You guys are all over the place. So your firm, when you joined, is actually the section of the business that really got them into GPU mining. Because I know that GPU mining, it's a whole different animal than just ASICs. There's a lot more to it. There's a lot more downtime difficulties that you might run into. So
there is. Yeah,
definitely have to make sure that you got all of that up and running smoothly so you can make sure that you're hosting to the best of your abilities.
That's right. And actually that facility behind Taras's head, Marble, it has tens of thousands of GPUs in it. So we still do a lot of GPU hosting, both GPU mining and other things associated with GPUs, such as rendering and stuff. Now, we also have, your high compute AI GPUs that are housed in a SOC 2 compliant tier 3 data center in Dalton. So we have a full AI lab in Dalton, which has, your higher end DGX2s from NVIDIA that you would not want to use for mining because it's a it's like taking a Ferrari to go to the grocery shopping, but but it is actually very similar infrastructure. So we have a lot of experience with GPUs from the software side, the hardware side, managing it. But we mostly have, from the blockchain crypto side, a lot of ASICs, and on the ASIC side of the house, we manage kind of everything across the board.
Yeah, that's great. And Tanas, what is it that you're primarily focused on right now with the team at CoreScientific?
Well, I got hired on as the Senior VP of Blockchain Business Development. So my role is primarily on getting new units into the door, working with new partners, looking at new potential sites for acquisition or tuck-ins, and then working with the corp dev team here at Core. So anything to do with blockchain, really, I'm working to manage the relationship and really make sure that Core is the leader within the space. So we've got a lot of articles coming out, some research that the team and I have been doing, these type of interviews, obviously, and also some new initiatives that will really bring Core as a true infrastructure provider to blockchain generally to top of mind for folks in the space. As Russ mentioned, we started off being our own self-miner, obviously, but as time's gone on, we've really pivoted to be a true hosting provider for clients, public companies, institutional investors, and obviously high net worth individuals. So as we continue this massive pivot to be a true infrastructure play, scales everything. So definitely be also working with some of the guys on Wall Street in the US and Bay Street up in Canada as well.
You must be doing really good work because there's a lot of articles coming out about these big orders that you guys have been putting in. How many
There's
miners?
More.
Many more to come. Well, that's good to hear.
Yeah.
I mean, are you guys focused right now on expanding at different locations, trying to fill out existing sites? Kind of what's the high level overview of what you're looking at?
You want to take this, Russ?
I'll start. Well, I'll just go to say the picture behind Taras's head, each of our 3 sites in Georgia, North Carolina, and Kentucky, they're all over 100 megawatts of power each.
Wow.
Built out. Yeah, so it's important. It's built out. They're actually finished. So it's not planned to
hundreds of megawatts running.
Right. So it's not we have a substation or we have some big power lines. We actually have it built out and running. So and there's a big distinction because someone can say, I have 500 megawatts. What they mean is they have a high transmission line running through their property. And one day there might be a substation there. And one day, years from now, there might be a facility there. So what we're doing right now, though, and Taras can go with some details, but, we had the halving event. So we had hundreds of thousands of old gen machines that, sometimes starting in May, kind of through the summer, we've cycled out, we've recycled or sold those machines. If there were clients' machines, we help them do those things. And then, what we've been doing now is moving into that new generation of equipment. And all that time frame has been consolidated because of the COVID-19 crisis, which put some constraints on supply chain, because a lot of these new gen machines should have been coming to market, earlier in the year. But when that supply chain kind of got compacted, it hit up against the halving. So that means this summer has been just really busy. Our data center techs that were quarantined to our data centers, by the way, during the pandemic in the spring, are right now have just been really busy throughout the entire summer, moving old gen equipment out, moving new gen equipment in, making the infrastructure changes you need for that. If you're taking a machine that uses 2,000 watts and you're putting a machine that uses 4,000 watts, there's some electrical infrastructure changes that have to happen. And we've been going through that whole cycle at really in all 3 states at all of our locations. So we go forward into the rest of this fall. We're going to be doing the same thing, bringing in a lot of new gen equipment. And right now we're planning 2021. What's that going to look like? What's the supply chain going to look like? What's the how many wafers are going to be dedicated to ASIC mining machines, and how many of those machines can we get? Taras, you want to add a little bit to that?
Candidly, we're bumping up to the end of the availability of the new gen units as we've been very successful in placing those with new clients and existing clients. And so a really big push that we've got now for Q3, end of Q3, Q4 is really looking for some of the old gen units that need a place, that need a good home that they can plug into and really maximize efficiencies and obviously hash rate with a solid, stable operating partner like CoreScientific. We've got some really great programs out, initiatives out, so that, if some folks are out there with 17 series units that have been at a higher price range and want to work with Core, definitely we're getting much more competitive on pricing to really get some of those units into our facilities. And then from there, rack and expand. Once we're filled up and we've got substations getting put up, obviously we're looking at additional expansion opportunities as a company generally. So it's going to be a very busy Q3, end of Q3, Q4. We've got some really good announcements that will make it a lot more compelling for folks who've got units to park them with Core. Based on the level of service center partnerships with some of the top organizations in the space.
One thing that I also want to dive into is the breakdown of how you look at ASIC mining, how GPUs make up part of your operations, and then FPGAs, if that's still a part of the business where you're doing a lot of work. Can you just talk about how you look at these different segments of the business and what your focus is on the GPU side versus ASIC side and how the hardware ties into it?
I'll start. So we basically divide our business segments into blockchain and AI, and really they're opposite sides of the same coin. AI is ways to process data. Blockchain is ways to manage and secure that data. And we see those two converging as the technologies develop. And we see the infrastructure has already converged. So if you go to, say, our Dalton facility, you'll see that we have a large blockchain data center, HPC data center, lots of ASIC machines. And in the middle of it sits a tier 3 AI center filled with, high compute GPUs performing the data processing. So, from the start, we divide things between blockchain and AI. Within the blockchain space, we look at the software side of things. So we have software applications on the blockchain side. We have software that manages the large fleets, and there's some great freeware out there for managing small fleets of 3, 4, 5, even 10,000 units. But once you get up around 100,000 units or more, there's not really anything that exists in the market. So we had to develop our own management software system and our own algorithms to really automate that process. The AI dev team actually helps with a lot of that. And because, we have a software called Minder, and it's our version of Skynet. It really takes over everything when it gets its fingers on it, but it keeps the machines running. So within blockchain, we have software, and then we have, of course, the infrastructure, which is broken out between the ASICs and GPUs. You mentioned FPGAs. We really don't have a lot of FPGAs. Actually, we don't have any FPGAs that are outside of our sandbox. We have a pretty substantial sandbox where we take and we literally get samples of just about anything that comes to market. And we let our dev team and infrastructure team work in those things. But when it comes to FPGAs, the number of programmers that are really sophisticated enough to program a data stream for the FPGAs, they're very limited and they're hard to find.
Yeah.
So at least commercially. So, GPUs, that's different. There's a lot of great GPUs on the market. We're mostly an NVIDIA house. We're partnering with NVIDIA on the AI side, and most of our GPUs are NVIDIA, though we do have some A&D products. And like I mentioned before, the Marble facility behind you, there's a 250,000 square foot building almost filled with GPUs. But most of our other facilities are filled with ASICs. So in the blockchain hosting side of the house, we split things between GPUs and we split things between ASICs. And the real difference is the skill set of the data center tech. GPUs and you mentioned this before, can be finicky little fellows. Mm-hmm. The GPU itself is a great little device, but you have to connect it into a rig. So you have to connect a bunch of them. They have to be connected to a motherboard, and there's risers, and there's a lot of small pieces to break. So, and then you have the airflow issue. So, we only accept closed case GPU rigs because, when I got into business, I built open air rigs because it just worked. And when you only have a few or even a few hundred, open air rigs worked. When you start getting into the tens of thousands, you can't have open air rigs because they just produce too much ambient heat. So that's really where we look at both sides of the business. And I talked about infrastructure, but I'll let Taras talk about how we kind of divide the business up as far as who our clients are and what kind of clients we go after. He mentioned a little bit of it earlier.
Yeah, so on the ASIC side, really, it's about large scale miners. We typically, the smallest scale that we work with is 100 miners, and We're really targeting to be working with institutional players. So we've got a lot of new clients that really are limited partner structures where several investors or investment entities will essentially pool their capital into a specific entity, and then they'll work with Core as their operating partner. Because of the scale at which we're working with Bitmain, we do have access to very strong pricing. And obviously, with the scale of our operations, our hosting services are very stable. The environment that we're operating in is very amenable to mining. And so really, when you're looking to deploy, say, $5, $10, $15 million into mining so that you get underlying exposure to the asset class, you don't necessarily want to be concerned about it being too hot on a Tuesday in the summer, right? So Core really does provide that stability and peace of mind for some of these more institutional, larger players that are looking to get into the space. That being said, we still do have smaller miners who are moving their units over to us, and actively, one of the things that we've been doing recently, if you've been taking a look at some of the articles we've been putting out, is we're dealing with some miners in China actually who are looking at the United States as a secondary place for them to park some of their mining rigs as well. That being because we do have access to very competitive power rates because of the scale that we operate on, the strength of the development team, the engineers, and obviously our executive team, the C-suite. With folks like Kevin Turner at our helm, we really are putting enterprise into blockchain and digital asset mining.
Yeah, definitely. And when you're putting together these packages, you kind of just outlined how there are the capital partners, the institutional investors. They'll come in, they'll bring the capital. Are you putting in front of them a fully ready to go turnkey operation that is already has power? Like there's already
Absolutely.
a building built, everything's ready,
Absolutely.
and then they're just there financing the miners?
Correct. We are a white glove service. Literally, they can cut a check and then they'll get access to a GUI that they will be able to track not just their fleet, but all the way down to a granular by unit basis of what their check is essentially converted into. And then based on whichever pool they select, they'll actually be able to see in a real time their hash that they're generating. And then obviously from the pool rewards that they've decided, we'll have the pool outcome deposited accordingly. So really, it is a turnkey solution.
Yeah. And what we've seen is, as over the years, especially since 2017, as the industry has developed in North America, we've seen specialization. And that happens in any industry. People specialize and people get good and efficient at whatever they're good at, whatever they perfect. And we've gotten good at the hosting game. And what that allows folks to do is, if they have a $10 million they want to invest or $1 million they want to invest, instead of spending a big chunk of that on building out infrastructure and then trying to go to negotiate power contracts and then trying to go to negotiate the mining contracts to buy the miners, we say, look, we'll take care of all the infrastructure. The price at which we'll do it for is most likely cheaper than what you're going to pay for just your power alone, because we have it at such scale. And then as Taras was saying, we provide that kind of white glove service. So if someone says, hey, I'd like to buy 1,000 of the new S19s, instead of you having to try to figure out if you're dealing with the correct Bitmain and you're dealing with U.S. customs and your freight forwarders and logistics and making sure you pay the right tariffs if you have tariffs to do, we'll handle all those things for customers. And it's mainly just because we want to make sure the customer has a good experience. We want to make sure that they don't have a bad experience. Their first foray into cryptocurrency or digital assets, we don't want it to be a bad experience for them. So we really will hold their hand and walk them through it. But we also deal with sophisticated clients too that call us up. Hey, we have 1,000 miners that are going to show up on Tuesday. Can I have those deployed by Thursday? All right, sounds good. We'll take care of it for you. So it just depends on the level or how long someone's been involved and how sophisticated of an operator they are. But what we really do is we try to be that layer of the infrastructure piece in the blockchain space for the miner, so that if you're a home miner and you have 100 units and you're paying 12 cents for power at your home or something, we're going to come in and cut that in half for you and handle all the work for you. So you're really going to appreciate it. And if you're a hedge fund or a small public traded company and you have limited capital to invest, we say, look, invest in miners, invest in revenue returning assets, and let us handle the infrastructure side of the house for you. We've already done the engineering. We already manage the airflow. We already manage the heat. We manage all those tough things. We've done that. And because we're a miner ourselves, we eat our own dog food. We do this for ourselves. So we understand exactly the heartache and the headache that comes along with this, being involved in this industry.
Yeah, definitely. And I like what you said about the specialization aspect, because you really do see different miners going into different areas. Some people go down the hosting route. Others might go and be on the miner purchasing side and trying to find some sort of ways where they can work with a hosting partner to make the best return. And then at that point, they're just going and evaluating different sites. And so I've spoken with a number of different companies that have been in the hosting game. And I mean, I'm sure that every single person who's in the hosting game naturally is going to say, oh, we're the best hosting service. We'll get you the fastest ROI. We'll take care of everything. And then sometimes when people go and host at those sites, they might not have the best experience. And so just taking a step back, where we're not talking about, I guess, an individual company, whether it be CoreScientific or one of the other hosting partners out there, if you're speaking to a miner who is evaluating a hosting site, what are the key factors that they should look out for? And what are some of the things where you think, as an industry, hosting is still running into problems with, and the challenges that hosting providers are facing?
I mean, candidly, it's a small space and everybody has their challenges. And the way I'd recommend any investor or potential miner who's looking at the space is to do their due diligence. And just like you would with any investment, look at management. I mean, the top 3 things to look at with any investment is management, right? Make sure that the hosting partner that you're working with, you can see where their management team is from. They're on LinkedIn, they're public. It's not folks in the back alley. Like, you're not going to give somebody that you meet in a back alley $1,000 to invest with. No, I mean, you trust it with the bank, somebody you can see online and see their credibility and history and reputation. And that's the same thing that I'd say with a hosting provider. Make sure the management is top notch. Make sure that they're audited in some way, not necessarily Big Four, but at least some CPAs reviewed their books, operating history. Make sure that if you ask to see the facility, they don't give you a side eye and say, what do you mean? Like, they're willing to open up their facilities, bring you in, show you around, and allow you to kick the tires, right? And then finally, look at the competitive rates and find out what type of services and value adds that they offer. Because at the end of the day, someone might go to you and say, I can get you 3 cents all in hosting. And then you read their MSA, their master services agreement, and all of a sudden they're nickeling and diming you on every single thing that you'll be needing them to essentially maintain your fleet. Additionally, there's larger operators like Core, where we have entire teams dedicated to development, to firmware optimization, to making sure that our latency when we're connecting to pools is as low as possible. I mean, all these little things eat away at your margin, because at the end of the day, hash rate equals block rewards equals BTC, right? Or whatever crypto you're mining. But in those key steps, you can be losing a lot of value because your server goes down, your latency isn't as strong as it could be. Connectivity may not be as strong as it could be within the different servers that you're using, et cetera, et cetera, et cetera. So you really do need to do your due diligence, especially when it comes to trusting a hosting provider with the CapEx that's represented by your hardware units themselves, right?
Yeah, and I would add just a couple things. At Core, when we onboard new clients, we have them meet with our network engineers, our software engineers, our facilities, our head of facilities. They're assigned a client representative, a client success rep to kind of be their point of contact within Core. But we also walk through things as minute as the average temperature. There in Marble, that facility behind Terrace's Head, that sits about 1,800 feet of elevation in the mountains of North Carolina. So even when it's hot in the summertime, it's not hot there just because you have that elevation. We have the same elevation at our other sites. So I would ask about, if I'm looking at a facility personally, I would ask about, temperatures. I'd want to see the thermodynamic engineering. I'd want to see what the airflow looks like. I'd want to see how they move the airflow. I want to see some thermal maps. Again, this is just me personally, if I'm bringing in 10,000 units or something. I'd want to see downtime. I'd want to know what the SLA is, how fast is someone going to respond. Certainly, the host is not responsible if there's a bad machine, as far as if there's bad engineering in a machine. But if a machine goes down, how fast is the response time? I don't know how fast a fan can be repaired, how fast a hashboard can be replaced. And we have, in each of our facilities, we have our on-site repair centers. So all those kind of things are measured in minutes, not even in hours. You know, a fan, a PSU. Now, if you got to replace some chips, that takes a little while because it's a time-consuming process to sit down and replace an ASIC chip on a hashboard. But, you know, I would ask a lot of those kind of questions. And Core is certainly the largest in North America, but there are a lot of great operators out there. There really are. But I would look, as Taras said, I would look at the history of the operation, the management team. I'd make sure the management team has a strong experience in this space. And I would look at the facilities themselves, and I just make sure that you have some quality engineering and quality construction. And quite frankly, because of some of the bankruptcy issues around the country's been going on with some facilities, I would look and see how everything was paid for. You know, there's been 2 or 3 high profile court cases recently with operators, and if you own the miners themselves, you get stuck in the middle of all that, right? Yeah. Your machines get turned off, and then they sit there for 3 or 4 months. And these machines are like bananas. They get worse every day, right? So if you haven't turned off for 3 or 4 months, you've lost a lot of money. So I would pay particular attention to those things. So.
Yeah. You guys are on the front lines with these large equipment orders. You're in contact with the different manufacturers. You, I'm sure, have teams of people who are analyzing kind of what's happening in the markets and what's happening with the overall network difficulty, understand the ROI times. What are some of the things that you think you might have insight into that your everyday miner or everyday person in blockchain might not necessarily be aware of?
So I'll take a stab at this. Supply chain is a big one. You know, we have great working relationships with the C-suite of all your major suppliers, even at NVIDIA on the GPU side, and then all your ASIC manufacturers as well. So I think, and we try to work very diligently to maintain that insight as to what supply chain is going to look like, not just the next quarter, but going into 2021. So that means looking at, you know, the foundries. What is the foundry? Who's in line with everyone at the foundry? How many wafer chips in 2021 are going to be set aside for ASIC, BTC cryptocurrency mining versus iPhones and laptops and iPads. So, we manage those things. We also have an analytics team that looks.
Sorry to interrupt, but how does that look? Do you have like any sort of like insight into how the foundries? Yeah,
I'm not going to say anything here. It's not public information, but it might not be something you actually look at every day like we do. There is supply constraint coming, serious supply constraint coming.
Yeah. When
COVID happened, it shut down some of the wafer manufacturing, and it really caused constraints that's going to ripple for a while. So, you know how in March and April you couldn't find toilet paper in the United States because toilet paper. No, I'm serious. Toilet paper.
Yeah. 100%.
Supply demand curve is very strong, and it hits exactly. So the industry had figured out exactly how much toilet paper Americans use, and it produced that much every week. When there was a disruption, it just caused a massive backup. Even today, there's still a backup because the supply was so tight on demand. And it's the same thing in the wafer chips. The supply is so tight. How many phones, computers, laptops, what does Intel want? What does Apple want? The supply was so tight with demand that when there was a halt, there's some bunched up demand right there. And we're going to experience it going into 2021. You're already experiencing it right now because if we had twice as many S19s as we had ordered, we'd had clients able to take them. We could have taken 3 times as many S19s as we had, and we'd had clients take them, but they're not available. They're not available, not just to us, they're not available to the Chinese either. So there's just no availability. And the availability that is there is getting sucked up, whether it's a Bitmain product, a MicroBT product, a Cann point, it's getting sucked up as fast as the wafer chips come off the line at foundries and are turned into machines. They're getting sucked up because there's a pent up supply issue, and we're going to experience that going through 2021. And again, I'm not saying anything that's outside of an NDA. All this is public available information. It just might not be something that the everyday miner looks at, right? Who's going to look at wafer chip manufacturing supply chain management? Like, who does that?
But we have to.
Yeah, somebody at Core does that. We have a team of analysts.
Who does that?
Core does that. Those guys, they're great. We have a team of analysts that study that stuff. and produce reports for us internally so we can know. And it tells Taras when he starts talking to clients and they say, oh, well, what's it look like in December? He can honestly tell them, here's what's coming to North America. Here's what they're producing in China. Here's what's coming to North America. Here's how many we have access to. If you're willing to, pay a little more, you can bump this other guy. He's willing to sell his spot or whatever. So that's one of the things we look at. Taras, are there other things that you think?
Yeah, I mean, a key issue that we're tracking right now is TSMC onshoring some foundry manufacturing and production in the United States. Obviously with the existing tariffs on some of the Chinese goods that are there, unfortunately, digital miners fall under those existing tariffs. So 2021, beginning of 2022, we're hoping to see a TSMC, Taiwanese semiconductor company, actually onshoring and building and assembling units within the United States. So that's something that we think will be a big relief and obviously will change the global mix of silicone use in production for high performance computing chips and ASICs and crypto mining units obviously as well. That's something we're tracking, and candidly, the more high net worth and institutional investors look at the space and really understand that it's here for the long term, the more capital that will be able to be dedicated to production and manufacturing capacity. And once that happens, a lot of these supply constraints within the space should ease up, and it should really be a much better matching to the required hash rate to maintain proper security of the requisite main blockchains that are now being viewed as monetary instruments versus pure commodities. So a lot of words there, but
that's fascinating.
There's a lot of topics to unpack. And candidly, it really is an industry that's coming out of the basement and into the boardroom, right? And CoreScientific is leading the charge within the North American sector to do so. So it's a busy time right now for the team. Yeah,
definitely. And when you're looking at, you mentioned the institutional capital that's really, I think, in part going to be a major piece in pushing this industry forward out of the basement and into the boardroom, as you said. There are a number of different capital groups that have come out that have said we're looking at investing more capital into the U.S. moving forward within cryptocurrency mining. And,
correct.
And that's a trend that obviously miners in the U.S. love to hear because a lot of that mining has been happening overseas. How do you think that it's going to continue to play out over time? Like, do you have some sort of insight into what a lot of these institutional investors who are trying to get into mining are looking at and why they're starting to deploy more capital into the U.S.? It could be regulatory. It could be for some other sort of reasons, maybe good power availability. What are some of those key factors that you guys are seeing today?
I'm gonna leave that for Taras, the former investment banker turned cryptocurrency executive. It's like a lob in home plate for a former investment banker.
Yeah, I mean, candidly, it's about scale, it's about sustainability, and it's about long-term returns, right? And I have to put on the CoreScientific hat here because really we're positioning ourselves to be that large-scale asset for larger pools of capital to invest and get behind. And really that's about making sure that CapEx is built up properly. So we have more of these type of facilities within the United States, Canada eventually as well, so that when you put down $50, $100 million, you're actually investing for a 20, 25-year term. So they're definitely looking for, again, management teams, expertise, and stability on an operational basis and obviously a cash flow basis, right? And that's really, Russ mentioned it earlier, that we've moved away from self-mining to a dual revenue model where we've got, SOC 2 Type 1, HP true high-performance computing centers that are doing AI, GPU, computational powers, graphic rendering, et cetera, and also on the blockchain side for the hosting services. We're going to be launching a new type of support for blockchain where we're providing infrastructure support for protocol teams. So if they want to master nodes, they don't have to go out and buy $40,000 worth of equipment. They can contact core, and we'd essentially spin them up a masternode. And so what that means from an institutional side is that we have stable, longer-term cash flows for them for certainty, essentially. Yeah. Go ahead, Russ.
I was just going to add a little bit. So an interesting part you talked about, or you asked about, William, was the capital that's interested in moving or funding mining, moving into North America. And Taras mentioned this earlier. We're seeing a lot of that movement from China. And it's not that anyone in China is replacing their infrastructure there. They're just looking and saying, hey, for new infrastructure and new deployment, we want to look outside of China. We want to look into North America. And some of that, quite frankly, is related to COVID. Back in the spring, it's hard to think back that far now because it seems like forever. But, we had borders had to close down in order to protect, the spread of virus and everything. So it made people really want to say, okay, how am I protected? How am I diversified? So what we're seeing is two things happening. We're seeing capital in North America say, okay, we will loan money to this industry. And then we're seeing the international market looking at North America as a destination for this industry. So we've always been in the space here in the U.S. and Canada, but now we're seeing a massive movement and a massive move into the space. We're a perfect location for it. We have a lot of excess power capacity here. Our power grid was designed, fully built out after World War II, when the U.S. and Canada was really the industrial base to rebuild the whole world after the last World War we had. So you have this enormous infrastructure base, and it's hydro, it's nuclear, it is some coal, but coal's very expensive, so we don't need to use any coal because it's so expensive. But natural gas. So we have this big power base, which it's the natural need, but then having the capital markets open up, I think it's going to see some accelerated growth. And those capital markets are just another piece of the stack when we talked about an industry that is, becoming more efficient. To become more efficient, capital needs to be efficient. And it's just another piece. So if there's a miner that wants to buy a machine, there's a capital source to loan money for that machine. There's a company like Core that says we'll build the infrastructure. All of a sudden, efficiencies start coming into play. And when you start seeing efficiencies, you start seeing industry grow. And I think we're going to see a lot of that in 2021, 2022, as North America, as North American capital wakes up to this market, because North America has a lot of capital in it. And as it's waking up to this market, we're going to see a lot more of it deployed here.
Yeah, and candidly, just like has happened in the traditional mining industry, gold, metal, PGM, obviously iron ore, I'd bet a shiny dollar that there's going to be a lot of consolidation in the space, a lot of M&A activity. Candidly, a lot of the smaller folks will probably not be able to survive regardless of how cheap their power is, because you'll need to scale to get the efficiencies to really operate competitively within the market. So right now there's 15, 20 fairly substantial mining plays. I'd say within the next 3 to 5 years, that'll probably go down to maybe at 5 or 10 tops. And obviously Core, we are looking at additional assets to really roll in, and we'll continue to do so as the market is very supportive of this type of activity. And so, to reinforce Russ, it's really diversification from institutional players to ensure that they're going right up the value chain within blockchain, not just going after the assets themselves, but obviously the operational side of it, so that they have full diversification within the sector.
Yeah. And I mean, you guys just touched on so many interesting pieces within that. One of them, I agree. I think that there's going to be a lot of consolidation within the industry. And I think that a lot of the big players are having those types of conversations right now with other firms. Just what happened like within gold, I think that not only within mining, I think that we're going to see a lot of consolidation within other parts of the industry, just not necessarily mining, but among potentially exchanges and other types of companies that provide these infrastructure like services that are not related to mining. But then also you mentioned, Russ, on the investment side, that a lot of these North American groups are more interested on the debt play, whereas a lot of the international investors are coming in more on the equity side. Did I hear that correctly, or was it?
Well, I think it's two things. North America, there's plenty of equity moving into this market. There's plenty of North American equity moving into this industry. But what I think is going to really accelerate the growth is when the North American capital markets decide to start putting debt on in this area. For instance,
got it.
Mining operations, the miners themselves, but also infrastructure. So, equity and debt are measured differently. Debt normally is cheaper source of capital, less risky. It's the first in the cap stack. So I think you're going to see both in North America. But certainly what's coming from, it's particularly Asia, particularly China, is going to be your equity owners that are coming in and taking and saying, okay, if I want to have my next 10,000 miners, I don't want them based in Inner Mongolia. I want them in North America. I already have I'm not closing down my Inner Mongolia operations. I just want to expand more. And it's not just the United States. Miners are kind of miners everywhere are really diversifying and looking at the geopolitical risk of having all of their operations in one umbrella. Now, here in the States, and you know this because you live in the States, each of our states there are 50 little political fiefdoms, right? So in the United States, the way you diversify politically is you're in multiple states. But we're a very large country with lots of states, and each state operates independently. So just like in the States, you operate in multiple states in order to avoid political risk associated with one state. A lot of the larger international operators are saying, hey, I need to be politically diversified, geopolitical risk, climate risk, natural disaster risk. There's all these kind of things, pandemic risk that I want to diversify out of. So I think we're seeing some of that play. And it's the same flight. It's the capital's moving with it. So,
yeah. Yeah, and candidly, also larger plays like Core are emerging within North America to show institutional money that we do have the expertise and the infrastructure where they can place capital. Whereas before, there really weren't too many players that were at scale to compete on a global basis. And now we're really showing and giving, the Chinese and Russians a run for their money. I know that Kazakhstani government recently announced $750 million to support digital mining. The Chinese government has had some issues with crypto mining recently. Russia has, been flip-flopping all over regarding regulations around how to deal with crypto mining and cryptocurrency. So a lot of these points of instability point to Canada, US, obviously, as places that are a little bit more stable and supportive of larger scale infrastructure projects. Because one thing I don't think Russ mentioned yet, but a lot of these projects where there's large scale hydro facilities or power access are in zones that used to be manufacturing hubs that aren't really as productive as they used to be. And so by giving them a new source of high-tech labor and use of these existing pieces of infrastructure, we really are giving a second wind to some of these communities, right?
Yeah, that's right. 100%. I mean, you also have the incentives of exactly kind of what you're mentioning, economic development zones. And when you think about the concept of cryptocurrency mining and how it works, whatever community you operate a large facility in, you're bringing in so much new taxable dollars to that community because it's a global industry that clearly is producing lots of value. And rather than having that Bitcoin that could be produced in China or Russia or Kazakhstan, now it's going into the U.S. if you're operating in the U.S. and in particular that local community where you decided to build up that large facility. So I mean, definitely see a lot of benefit from having a large company like CoreScientific or any mining company who wants to build a large facility in a community. Once you talk through the benefits with those people in government there, the state government, they really do. Once they grasp the concept, they really want you to come into their state and bring that value in.
Yeah.
William, it's a very compelling story. The facility behind Terrace's Head in North Carolina, it sit vacant for 10 or 12 years. It was a denim manufacturing company, but that particular facility is in a town of under 300 people. So it sits in a town of under 300 people, and
wow.
we employed 10 or 15% of the population of the town, right? So we employ a large chunk of the town. And that facility sat empty for over a decade. So it has a meaningful impact because we also, by the way, we pay a lot. We pay a lot more than local wages are by a significant margin. So those folks are seriously contributing to the local economy. They go out to eat, they buy things. It moves the local economy in a meaningful way. The same thing in our Kentucky location. Our Kentucky location is in an enormous building. It's over 1 million square feet. It has traffic patterns inside the building. It's so big. The facility was a former aluminum smelting plant that had been empty for years. And it's in it's in a very small town, less than 900 people. We employ a significant portion of the town's population, and it has a serious impact, a meaningful impact in that area in Kentucky. So, Taras mentioned this. We have to go where there's lots of readily available power. In a lot of instances, that's in heavy industry. And then, of course, what happened in the 80s, 90s, and in the 2000s is the U.S. economy changed. Some of that heavy industry moved out, but it left these vacant shells with heavy power infrastructure.
Yeah.
And it's just really interesting that this very new technology of blockchain is moving into some of these spaces and taking legacy textile, legacy aluminum smelting. It's crazy that we're now mining Bitcoin in aluminum. We talked about the old metal plant. We're mining Bitcoin in an aluminum smelting plant. We're mining. We're doing GPU rendering in a former Levi's denim plant. Right? It's just the craziest thing. So it's really cool, and it tells a great story locally. So I think it's a good move for the U.S. and for Canada to open this industry up in North America. And there's regulations that have slowed it down, but certainly we've found a lot of local government is very, very open to what we have to offer.
Yeah, and one of the things that Russ and I have been working on is really getting Core to be part of some of that policy change. So we'll have an announcement in the next few weeks around one of the groups that Core has partnered with that really is on the forefront of that within the U.S. political scene. And the only other thing I'd add to Russ's comments is there have been instances in the past where the overuse of power and the inappropriate planning has led to some issues with, power prices go up with local consumers. But, with the proper planning, this can obviously be avoided, to make sure that the power utility has a good line of sight on the power use of a large scale mining operation so that it doesn't impact power use rates for local consumers. That's something that Core looks at and does tons of studies on. We've hired some of the top experts within the power industry to work with Core. And so as we scale up to a gigawatt or more, we'll definitely be making sure that any communities that we work within are treated properly. We're creating jobs, and we're obviously not increasing the power rates for local consumers.
I've talked with a lot of different people in mining who've had the conceptual idea of what could be done within AI or data processing, high performance compute outside of purely mining for Bitcoin or one of these other blockchain networks like Ethereum. And so you guys seem to have made that next transition into actually going and monetizing a route that is outside of mining, but is more along the HPC play. And
Correct.
Can you talk about how that began and where it is today, and just kind of what that journey was like? Because I'm sure that would be extremely valuable for anyone listening.
So, our AI side of the house, first off, it developed organically. We were developing the software and the means to manage our own machines. We developed our own, version of what to mine, where machine learning, the algorithms tell us, how coin switching in a mining platform on what's the most profitable. So we were developing all this in-house. And we decided to, eat our own dog food and develop the data center in order to house this high compute stuff, the higher end DGXs, the NVIDIA products. And from there, we went ahead and went full on, as Taras mentioned, the SOC 2 Type 1 compliant Tier 3 AI data center. And that led to us developing software stacks with Plexus and some of the other big data folks. And I think we publicize it all over the news. And I'll tell you what, sometime if you want to really dive into it, Ian, who's our head of AI, he's a brilliant fella, and could really go down a rabbit hole with you on this if you want to go down it. But I'm going to kind of keep glossing over at least the part that I know about. See, on my tech side of the house, I'm an infrastructure guy. I can plug some coaxial cable in and make internet. But on the AI side, we offer the software stack for developers and data scientists in order to access the high compute GPUs and process their data. So we'll help them migrate their data to our system, and then our GPUs they will either rent or buy time on our GPUs to process all that data and then spit out the results. So we play in a very specific piece of the bell curve on the AI, hardware chain. We play on the far right-hand side, we on the very, very high compute piece. And we do that because the infrastructure for those very high-end compute piece, it's power heavy, it's heat heavy, and it's actual weight heavy. And all those things are very hard to do in traditional data centers. So but they're not hard to do they look a lot like GPU mining. So when we've learned that little tool there, we said, hey, we can develop data centers that are very specific for this piece of the AI platform. So we did. So we developed data centers that are great at housing hardware that's hard to house in a traditional data center. So we are an HPC, high compute, lots of data processing happens. And on our AI side, we do the software stacks. We help them develop the infrastructure to move their data to our location, or at their locations, and we process that data and send it back to them. And I think we announce it sometimes, but our clients are publicly traded companies, government agencies, and then some smaller houses. One of the coolest things we did recently that I'm really proud of, the COVID outbreak in the United States first really hit home in Seattle. We're headquartered there. So it affected us pretty dramatically. And our whole AI team got together and we threw a lot of AI compute at the vaccine. And we still, to this day, some of our data scientists, some of our programmers, and a lot of our hardware are going towards that RNA, some of the RNA mapping that's used in the vaccine that's going to be coming out in a couple months here. Core was part of that team. We teamed up with MIT to make it available for folks. So we don't just do it just for make money. We also do it to try to help a little bit too. So,
yeah, that's great. But outside of blockchain and crypto, my next question, I guess we'll start with you, Tadas, is what is your favorite book?
Well, funny you should ask. It's 1984 by George Orwell. Kind of in line exactly with what we've been talking about. And, the parallels between what he prophesies in that book as to what's going on today, Ministry of Truth, doublespeak. It's terrifying, candidly. And it really is something that we should all be looking at and trying to get our heads around. What is the purpose of technology and how are we using it on a day-to-day basis? Personally, I think that 1984 is something that everybody should read at least twice, because the first time you read it, it's more of like a shock to the system. The second time, you can see that there are nuances, and you can also draw some learnings as to how, at the end of the day, technology is there to support us, but if it's used for these nefarious purposes to control a population, etc., that's not what it should be doing, right? And so it's my favorite book because it's the most salient to the reality that we're all experiencing today. Not the most fun book, but it's definitely the one I talk about most. Yeah.
Yeah, actually, you're not the first person that has said that book. So I guess that book really has resonated with a lot of people who've come on this podcast, at least.
Yeah.
Because 2020 is a shit show. So as a year, it just won, it really
maybe
does.
If this interview was done like 3 years later, we'd be getting some different answers.
Yeah. If 2020 is hindsight, who needs hindsight, right? Yeah.
Oh, yeah, that's great. Well, what about you, Russ? What's your favorite?
So my wife would tell you my head's always in a book. I read somewhere between 1 and 3 books a week.
Wow.
Most of it is escapism. I like fantasy, science fiction. Now I do read your occasional business book and it's something educational periodically. But I thought about this, and I really like the Wheel of Time series. Pen named Robert Jordan. He's passed away now, but it was about a 14-book series, probably 15,000 pages, small print. Wow. It's really fantastic, but it's kind of a world. It's a world builder. It's a time builder. It takes place over thousands of years, much like the Dune books that take place over 30,000 years. And I just say that because I was just reading recently. There's a new version of the movie a movie version of the book's coming out again. But so if I look at books, I like stuff like that. I like the fantasy, the world building, seeing how people think reality might be in the distant past or the far distant future. So for me, that's where it's at.
Yeah, actually, now that you bring that up as your favorite book, it kind of makes sense. Like going into what we'll talk about later with AI, but just a lot of those sci-fi type books and stories, I think it's almost like a map for what's going to eventually happen in the future. I mean, if you can think of it, then you can build it. And I think that
Star Trek.
Yeah, exactly. Yeah, the people who write those books really are guiding in a way where the innovators and the people who try and build these businesses try and take it just directionally.
Yeah, for sure.
Yeah. Do you normally listen to those on like audiobooks, or are you reading like page by page?
I'm a reader. If I'm laying in bed, it's on my iPad or e-reader. But if it's the weekend, then I'm outside and it's in it's a hardback. I can't travel with hardbacks. I used to have, when I would go on a business trip, prior to your e-readers and stuff, I'd have to take a handful of books with me. They'd literally take up half of my luggage. Now I can take my iPad and I have, 200 books on it and I'm good to go. So, and then if I finish something, I can put my thumb on it and I can download the next 3 versions or the next 3 copies or something. So, but I love sitting in the pool or sitting outside in the woods. And so I like having the actual print material in my hands sometimes.
Yeah.
Nothing beats paper.
Yeah.
Actually, I'm starting to connect the dots now, because before the podcast started, we were talking about how much you travel, and that's a lot of plane time where you can just crank through books and books. Yeah. How many miles was it? Did you say that you traveled?
Over 300,000 last year.
Oh my gosh,
a lot of air.
Nuts.
Yeah. And you're right. I will say this. Yeah, during the COVID, when I have traveled less, I have been reading less because I was spending a lot of plane time, and plane time is great for reading.
Ask, what are some of the most interesting and potentially scary things that you think are being worked on today with AI, and where do you think that, given a longer time horizon, where that could lead?
So some of the most promising things, I think, are in the fields of medicine, particularly. I think if we can take and use artificial intelligence, machine learning to take the best medical doctors in the world and make them available, or make them available to everyone, I think we're going to see some crazy advances in healthcare. So I think healthcare is kind of one of the most promising. On the similar line, I guess, related to health and well-being, I think machine learning and AI in the food process supply chain is going to improve our yield as far as food production goes. And that's related to weather and water and soil content. So many plants, there's a lot of inputs that go into our food supply around the world. And certainly if you can have machines learn, and we've done this, it takes a lot fewer farmers to feed the whole world than it did even 100 years ago, and certainly, 200, 300 years ago. Yep. And so we're continuously using technology to improve the yield of one person working to feed many. And so I think the world of AI and machine learning is going to see that. And of course, there's the scary side of things. We have a defense contractor that uses our AI. It is one of our clients, and I can't mention who, but I can tell you when you say defense contractor and AI, it's immediately scary, because my immediate jump is Skynet, right? Like I've seen Terminator. We've all seen it. We know how this ends. You start letting AI control drones, and if you tell a drone to go kill a human, and that's AI had been told to kill a human, next thing you know, that can spiral out of control. And indeed, that's the scary part. There's a lot of sci-fi movies made about that. So, and people like to say, "Oh no, machine will never be smarter than human." Well, you're being ignorant as a human to think that we're not going to have machines that are going to be smarter than us. So I think if we control it, AI can make our lives much better. I think in the very short term, we're going to see self-driving cars. And I think for those of us that are middle-aged and drive all the time, it's just going to be a great convenience not to have to drive. But for older folks, it's going to be life-changing. For folks that may have some handicap that makes their mobility difficult, it's going to be life-changing. So I think in the very short run, we're going to see AI in the form of self-driving cars. That's just a prime example. It's going to make our lives much better. Because of COVID, a lot of folks are getting groceries and stuff delivered to their house. Where if all of a sudden that grocery delivery is done by a drone and it's dropped off, it dropped into your kitchen. I think there's going to be a lot of things that's going to make life easier for folks. I will say, I think there's going to be an enormous divide, and it's going to be country and industry specific. So I think in the developed world, in the States, parts of Asia and Europe, you're going to see a lot more AI that is involved in your daily life. And there's going to be some parts of the world where it never reaches it. So again, I think there's going to be great things related to healthcare, related to life conveniences. But then there's going to be scary things related to defense, related to space exploration. Humans are a violent animal.
Violent
animal. So I think those things are going to happen. And our hope is not to be involved in the paranoid violent side of the house, but be involved in helping write the RNA mapping for the COVID vaccine, helping. We have an announcement coming out about food supply chain stuff soon. So I think those things are very promising. And I think you mentioned this about data. In 2018, the world started producing more data every day than we can process. So AI is going to have to advance. It's going to advance in order to process all that data. And if we can start analyzing that data and use it to make mankind better, to make life better for folks, it could be a pretty exciting thing. Of course, most likely it's going to first be used in a commercial sense to sell us more crap. To make us buy more trinkets online. We already do that. We have AI right now in-house at Core that is literally used to make you log into your video game and buy more online trinkets or whatever, right? I mean, so seriously, AI is going to be developed there first, but that will spin out into other things. So I guess I should say I'm cautiously optimistic, but Taras, I'll let you grab that if you want.
Yeah, I mean, the way I look at it, it's, humans have always had tools, right? And from the days where we made fire using rocks and stones, etc., you can look at a tool, for example, a knife. A knife can make you lunch, or a knife can stab your neighbor, right? And just like that, an AI can either be a net positive or a net negative for the world. And I mean, I touched on it briefly earlier, but Russ gave a lot more insight into it. And I mean, when it comes to waste, there's huge amounts of waste in today's industries. Look at food waste. I think it's like 30 to 40% of all crops that are produced are just destroyed because of waste. Well, guess what? AI can actually help optimize a lot of our systems. There's entire industries built around productivity and efficiency improvement. Like ask the McKinseys, the Bain, the Booz and companies of the world. Well, AI can do a lot of that stuff fairly simply and pretty quickly as well, once we've developed the software and obviously the hardware infrastructure to be able to process those questions. Back to one of the points you mentioned around simulation theory, that's Monte Carlo analysis, right? And that is really one of the major things that AI is able to do a lot faster than any human could possibly. You could run through 1 million simulations of a specific fact pattern within a few minutes using, for example, Core's infrastructure, but generally a supercomputer that we now have access to. And this is where I think hardware will be the tool versus the weapon of the future. I think that our politicians really need to get to the table and start understanding at how potent of a weapon AI can be. And I mean, we've got major thought leaders that are already, lighting off that red signal, flashing to the politicians. I know Elon Musk has talked about it. Peter Thiel, Bill Gates, they've all said that AI, if not checked and controlled and regulated properly, could lead to the destruction of humanity because of an uncontrolled program that goes off that has too much access to, key infrastructure, et cetera. And so the fact of it being a weapon, I think, can be contained. I think it can be controlled. But the benefit of it, I think, will be changing for humanity completely. And so, I mean, I could talk about AI for weeks and weeks, but it's a net positive. And I think that being part of the core team, being part of the group that's building the infrastructure to support this type of computational need to answer the problems that the world has is being part of the solution.
Yeah, definitely. Well, I think that's a great note to finish up on. This has been a lot of fun, guys. Thank you for coming on.
Appreciate the time.
Thanks.
Yeah. Just before we sign off, is there anywhere online where everyone listening can connect with you guys individually or the company?
Absolutely.
CoreScientific.com. Go to the website. And we're both actually on the website under the teams or the About Us or something like that. But from our website, you can connect to us. You can connect to our AI team if you think that's a platform you need to be involved in, or the blockchain software side, or the crypto mining, digital asset hosting side. We can do all that from right from the web. Yeah. So, and of course, we're on LinkedIn and all the major social medias as well.
Yeah.
So.
Awesome. Thanks again.
Thanks, William.
Thank you for listening to this episode of the Sazmining Podcast. Be sure to follow us on social media and YouTube for the latest updates and previews of upcoming episodes. Full episodes and transcripts can be found on sazmining.com every Thursday. If you want to hear us interview a particular guest on a future episode, please reach out to us at podcast@sazmining.com.